everyone. Welcome to today's webinar on balancing risk and returns in a changing economic climate. We're thrilled to have you here with us. My name is Denise O'Reilly.
And I'm Michael O'Reilly. Together, we're co-managers of Flow Equity Partners, a real estate investing firm. Our mission is to help investors protect and grow their wealth through multifamily investments that are tax advantaged, cash flow, and appreciate while limiting exposure to public market volatility and inflation. We do this while improving communities for the residents that we serve. The word flow means so many things to us. And as it relates to our investment firm, Flow Equity Partners, it stands for finding lucrative opportunities for wealth through real estate investing. And in life, it represents freedom, lifestyle, ohana, or family, and well-being.
So before diving in, we'd love to tell you a little bit about ourselves. I come from a 20-year real estate background, having worked in acquisition, sales, and property management. And Michael was an equity trader for 23 years, trading for institutions and family offices before we joined forces professionally and transitioned to the world of multifamily investing. As partners in life and business, we understand the importance of freedom and quality time with family. Our main driving force is to create generational wealth through real estate investing, allowing us to enjoy the lifestyle we desire while providing for our loved ones, and we want the same for you.
Now let's explore why apartments are recession resilient. One of the key factors is that they're existing assets with strong in-place cash flows. They're already proven successful businesses, but they can still be improved. This provides a solid foundation for stable returns and upside potential.
Additionally, we take a relatively conservative approach towards debt, ensuring we maintain financial stability even during economic downturns. Our strategic focus on primarily B-class workforce housing keeps occupancy high, even when facing a recession.
Moreover, we have the pricing power to raise rents at our properties. Even if the market rents decline, this flexibility allows us to adapt to changing market conditions while maintaining profitability.
So this next slide is a graph which we sourced from CoStar and Moody Analytics. It illustrates multifamily vacancies between the years of 2009 to 2023. You'll see vacancies specifically for Class B and C have been steadily declining, meaning demand has grown and the forecast shows continued high demand.
If we delve a little bit deeper in how multifamily properties perform during a recession, within that multifamily property landscape, there's a property class system ranking properties as Class A, B, C, and D.
Lessons learned from past recessions, such as the Great Recession in 2007 and 2008, and the recent COVID-19 pandemic, reveal that multifamily investors saw a quicker bounce back compared to other sectors. Demand for housing remains resilient, even in challenging times.
That's right. And holding up during the downturn is one of the strengths of this asset class. The real estate market constantly sees new potential tenants emerge to fill vacancies in the multifamily buildings, ensuring a steady stream of income.
With rising inflation and concerns about a potential recession on the horizon, many Americans are gearing up to tighten their belts. However, multifamily properties continue to provide essential housing, making them a stable investment option.
So on this slide here, you'll see from July 2010 to December 2021, wages increased indicated by the gray and the green line, and the red dotted line indicates the consumer price index, which is a lagging indicator to the producer price index, but they're both indications of inflation. Many believe that these numbers were significantly understated during this period, but the important part is to look at the yellow line, which indicates the significant rental growth during this time. So what this means is if you were invested in multifamily real estate, your dollar was growing significantly. What's also important to note is that rental growth along with inflation is starting to subside, and the growth will not sustain at these levels. Shown on this graph, they should, however, come back to a more reasonable level of between 4% and 6%.
So now let's discuss advantages of passive investing in a multifamily fund compared to owning individual properties. Investing in a diversified portfolio of properties across different markets, property types, and risk profiles allows you to reduce your exposure to any single investment.
That's right. And by partnering with Flow Equity Partners, you could tap into the expertise of professional managers. Our team has years of experience and a track record of success in multifamily real estate investing.
In addition, a multifamily fund offers access to institutional quality deals that may not be available to individual investors. This provides you with the opportunity to participate in high-quality investments and benefit from extensive market research and due diligence conducted by our team.
Another advantage of investing in multifamily fund is the ability to achieve diversification. With a diversified portfolio, you could spread your risk across different markets, property types, and risk profiles. This helps mitigate the impact of any single property's performance on your overall investment. Additionally, a multifamily fund can benefit from economies of scale. Through pooling investor capital, we could secure lower financing costs, reduce property management expenses, and have a better negotiating power with vendors. These efficiencies can enhance our returns for our investors.
That's right. And furthermore, passive investing in a multifamily fund provides a convenient option for individuals who don't have the time, resources, or expertise to manage properties themselves. It allows you to enjoy the benefits of real estate investment, such as cash flow and appreciation, without the burdens of day-to-day property management.
So this slide here is one of our most recent acquisitions. This is Maverick Oak Lawn, 137 unit B-class property located less than 2 miles from downtown Dallas, directly adjacent to Uptown.
So you might be wondering why now is a great time to invest in multifamily real estate. So let's explore a few reasons.
Well, firstly, if interest rates are not going down significantly, then they are likely to stay stagnant or even increase. This creates an environment where investing in real estate becomes even more attractive.
That's right. And additionally, you've heard the term, all ships rise with the tide, meaning as the economy grows, rents are likely to also increase. Occupancy rates are currently at historical highs due to the scarcity of housing, making it a favorable market for investors.
Investing in multifamily properties allows you to capitalize on this growing demand and potentially achieve long-term wealth accumulation.
So these are images of some of the types of assets that we invest in. Actually, some of them are in actual buildings we've invested in. And we prefer to invest in Dallas and the Sun Belt region because they're landlord friendly, business friendly, and they have very strong economic drivers.
Multifamily real estate is a good investment during inflationary times. Inflation is a topic of concern for many investors. However, multifamily real estate can serve as a good investment during inflationary times.
So different types of inflation impact various sectors of the economy differently. Multifamily housing, being an essential need, tends to be less affected by certain types of inflation. So you'll notice that the Fed has increased rates dramatically in the past year or so. I would say that mortgage rates were 3 to 4% last year at this time. Now they sit at about 7%, which is a huge increase. And that really prices some potential homeowners out of the market where affordability becomes an issue and they're forced to become renters. As far as multifamily goes, that's a good thing because with that kind of a demand, rental rates continue to rise, and that is just something that helps with multifamily investing.
Furthermore, multifamily real estate is a good hedge against inflation because rental income has the potential to increase with inflation, preserving the purchasing power of your investment dollars.
So investing passively in a multifamily real estate fund provides a way to benefit from potential inflationary pressure while mitigating risks associated with individual property ownership.
It's important to assess whether passive investing in multifamily real estate fund aligns with your investment goals and your preferences.
Consider factors such as your risk tolerance, desired level of involvement, and the potential returns you expect to achieve. Review the track record and expertise of the fund's management team, like Flow Equity Partners, to ensure that they align with your expectations.
Also, remember that investing in real estate, whether actively or passively, requires careful consideration and due diligence. It's crucial to work with a trusted partnerships who have proven track record and share your values. On this slide, we'll just look at briefly, historically, the allocation that used to be suggested for people to get diversification was about 60% stocks, 40% bonds. Those ideals are changing. These days, it's about 50% stocks, 30% bonds, and now about 20% will in the future be allocated to alternative investing. Currently on this next slide, you'll see this 4% number is what's currently allocated to alternative investments. In the next 4 years, it's projected to be scaled up to 20%. That additional 16% represents $22.1 trillion that will be chasing alternative investments and a portion of that into multifamily real estate.
Wow, that's a really staggering amount in a short amount of time. So now we would like to just express our gratitude for joining us today. At Flow Equity Partners, we're dedicated to being good stewards of investor dollars and operating with transparency and integrity. We believe in building long-term relationships with our investors based on trust and mutual success.
We invite you to explore the opportunity available with Flow Equity Partners. Our team is ready to answer any questions you might have and provide you with detailed information on our investment strategy and past performance.
Remember, investing in multifamily real estate can provide an additional income stream, potential tax benefits, and the opportunity for long-term appreciation. It's an asset class that has shown resilience and growth, even in challenging economic climates.
Feel free to scan our QR code, or you can contact us via email at connect@flowequitypartners.com, or you can visit us at our website, flowequitypartners.com. We're here to help guide you and answer any questions you might have about passive investing through multifamily real estate. And we just want to say thank you very much for joining us today.
Thank you for joining us. Have a great day.